Welcome back to Investing Talk podcast. Today we're doing a deep dive, really getting into a major development. It involves a clinical stage gene editing company and, well, one of the absolute giants in big pharma.
Certainly got people talking.
Absolutely. Our mission here is to unpack all the news around Eli Lilly acquiring Verve Therapeutics. We want to use the available info to understand the key details, the market reaction, and really importantly, what this signals for the future of gene editing, especially in cardiovascular health.
Right, just fascinating intersection. Cutting-edge science meets big market strategy.
Exactly. And hey, as we dig into this, if you haven't already, maybe take a second to subscribe, like the show, leave a comment. And if you feel generous, buying us a coffee always helps fuel these deep dives.
It is definitely a landmark piece of news in the biotech world, especially big for gene editing and cardiovascular fields. It's one of those moves that really shifts perceptions.
It really is. So let's start with the core announcement. It dropped June 17th, 2025. Eli Lilly announced a definitive agreement to acquire Verve Therapeutics.
And this isn't just a partnership, right? It's a full buyout.
That's the key, a full acquisition.
Okay. And the deal values Verve at, what, around $1.3 billion?
Roughly, yes. About $1.3 billion.
So the deal structure. Shareholders get $10.50 per share in cash up front.
Right.
But there's also this thing called a contingent value, right? A CVR.
Ah, yes, the CVR. Explain that a bit.
Well, it basically means there's potential for an extra payout later on.
Yeah.
But, and this is the important part, it's tied directly to hitting specific future milestones. Think clinical trial success or getting regulatory approval for Verve's drugs.
So it's a way for Lilly to hedge its bets a bit and for Verve shareholders to maybe get more if things go really well down the line.
Exactly. Mitigates risk for the buyer, offers potential upside for the sellers if the pipeline truly delivers.
Okay, so Verve Therapeutics, beyond just being a clinical stage biotech, what's their specific angle? What makes them stand out?
Verve had a very, very clear focus, an ambitious one too. They're all in on gene editing medicine specifically for cardiovascular disease.
Just heart disease.
Primarily, yes. Their whole vision is about creating single-dose treatments, potentially curative therapies.
Wow. So instead of taking, say, a cholesterol pill every day for life.
Right. Instead of managing a chronic condition forever, they're aiming for a one-time fix. Edit the underlying genetic issue.
A single shot. Potentially a cure for heart disease risk. That sounds, well, revolutionary.
It would be. And their lead program, the one getting most of the attention, is VERVE-102.
VRVE 102. Okay, what does that do?
It targets a gene called PCSK9. It's in the liver.
PCSK9. I've heard of that in relation to cholesterol drugs, right?
Precisely. The PCSK9 gene makes a protein that essentially limits how many LDL receptors your liver cells have on their surface. These receptors are what pull the bad LDL cholesterol out of your blood.
So less PCSK9 protein means more receptors.
Exactly. More receptors available, the liver clears more LDL cholesterol. So by editing the PCSK9 gene to reduce the protein, Verve aims to permanently lower LDL levels.
You're basically boosting the body's own cholesterol clearing system by tweaking a gene. That's clever. And this is already being tested in people.
Yep, it's in phase 1b trials. And importantly, it got fast-track designation from the FDA.
Which means the FDA sees its potential for a serious unmet need.
Correct. It signals the agency recognizes its potential significance. The initial focus is on patients with heterozygous familial hypercholesterolemia.
That's the severe inherited high cholesterol.
Right. Leads to very early heart disease, often. And also some people with premature coronary artery disease, even if their cholesterol wasn't sky high initially, but they have underlying genetic risks.
So targeting tough-to-treat populations first, that makes sense. Does Verve have other programs like this?
They do. They're not just a one-trick pony. They have VERVE-201.
Okay, VERV-201, different target.
Yes. This one targets a different gene called ANGPTL3. This protein also affects lipid metabolism. Editing AGPTL3 is aimed at patients with refractory hypercholesterolemia, meaning their cholesterol is really hard to treat with standard drugs, and also the even rarer, more severe form, homozygous familial hypercholesterolemia.
Got it. So PCSK9 with 102, ANGPTL3 with 201. Anything else?
There's VERVE-301. This one targets the LPA gene.
LPA, lipoprotein.
Exactly. That's another independent risk factor for heart disease, separate from LDL cholesterol. So they have multiple shots on goal, all aimed at different genetic drivers of cardiovascular risk.
That's a really focused pipeline attacking a huge health issue. Okay, let's shift to the buyer. Eli Lilly. They're riding high with drugs like Mounjaro, right? Metabolic health, diabetes. There's a connection to heart risk there.
Definitely a connection.
So why this move? Why jump into gene editing and specifically Verve?
Well, it fits perfectly with what Lilly's been saying about their strategy. They're using the financial firepower from Mounjaro and their other successes to diversify, to move into really cutting-edge areas.
Like curative genetic medicines.
Precisely. This isn't just adding another drug to manage a condition. It's about exploring a completely different way to treat disease, moving towards potentially curing it.
It feels bigger than just Lilly, though. Does this acquisition signal something about the whole pharma industry?
Oh, absolutely. It really highlights Big Pharma's growing, maybe even accelerating interest in gene editing for chronic diseases.
Moving beyond the traditional model.
Yeah, think about it. For decades, the model was mostly about drugs you take repeatedly, daily pills, weekly shots to manage symptoms or slow things down. Gene editing holds the promise of a one-time, lasting, maybe even curative treatment.
From chronic management to potential cure, that's a fundamental shift.
A profound shift. And Lilly is clearly placing a big bet that this is where medicine is headed, especially for something like heart disease, where the genetic links are pretty well understood.
And the fact that they acquired Verve, rather than just partnering or building their own thing from scratch for cardiovascular, what does that signal?
I think it's a huge validation, a real stamp of approval for Verve's specific approach and their focus. There are lots of gene editing companies out there, right?
Sure, working on different diseases.
Right, but Lilly buying Verve specifically says they see targeting these lipid drivers of heart disease with this technology as a top priority, a potentially very valuable application. It suggests Verve's platform was seen as differentiated, advanced enough to warrant a $1.3 billion price tag.
Okay, validation from a giant. How did the market react when this news actually hit?
Predictably dramatic for Verve shares. The offer, the $10.50 cash plus that CVR, was a really substantial premium over where the stock had been trading just before.
How substantial?
Some reports suggested it basically doubled the company's market value almost overnight compared to pre-announcement levels.
Doubled. Wow. And trading activity. Sentiment.
Oh, volume went through the roof. Huge spike. The news was everywhere in the biotech world. Analyst commentary, chatter on places like X or Reddit, generally pretty positive.
People saw the strategic fit.
Yeah, recognition of the fit with Lilly, the validation point we just talked about. But you also saw the usual caution around the CVRs.
Right, because their value is uncertain.
Exactly. Yeah. Depends entirely on hitting those future milestones. So optimism, but tempered with realism about the CVR component.
Makes sense. How did this sudden surge compare to Verve's stock performance, say, over the 6 months or year before this?
Oh, it was a night and day difference. In the run-up to the news and right after, you had this explosive move upwards. Before that, it was much more the typical roller coaster of a clinical stage biotech.
Up and down, sideways.
Pretty much. Volatile, moving on general market wins, maybe some pipeline news here and there, but no clear, sustained upward trend like this. The acquisition fundamentally rewrote the stock story.
Okay, let's peek at Verve's financials, but looking back before the acquisition was announced, keeping in mind they're a development company.
Right, crucial context. Historically, like pretty much all clinical stage biotechs, Verve wasn't generating revenue from selling products.
So negative income, negative earnings per share.
Correct. They were burning cash, investing heavily in R&D. That's the standard playbook at this stage. You spend money now to hopefully create huge value later.
But you mentioned something interesting popped up in their recent financials, Q1 of 2025.
Yes, this is where it gets really interesting, and maybe it was a bit of a tell looking back. Verve reported Q1 2025 revenue of nearly $33 million.
Okay, and why is that interesting?
Because the analyst consensus estimate was way lower, around $7 million. So they blew past expectations on revenue.
Whoa, and earnings. Still negative.
Still negative EPS, yes, but again, much better than expected. They reported negative $1.35 per share, while the street was expecting something closer to negative $1.71.
All right, that revenue beat is huge for a company not selling anything. Where would that $33 million have come from?
Almost certainly from licensing deals or hitting milestones and partnerships they already had.
Ah, so other companies paying them for access to their tech or for progress made.
Exactly. It's a common way for innovative biotechs like Verve to bring in cash without selling more stock, non-dilutive funding, they call it. It suggests that even before Lilly stepped in to buy the whole company, other players were recognizing the value and were willing to pay for access or collaboration. External validation was building.
So hints of this were already there in the numbers. And financially, we'd expect low debt, reliance on equity raises, negative free cash flow due to the R&D spend.
That's the typical profile, yes. Focused entirely on development, not near-term profits. You'd need to check the official filings for exact figures on debt to equity or free cash flow, but that's the expectation.
Okay. Strong validation from Q1 financials, then the ultimate validation with the Lilly buyout. How does Verve's specific approach compare within the wider gene editing field?
I think their key differentiator, and likely what attracted Lilly, was that laser focus.
Just on the heart disease lipids.
Right. Single-course genetic cures for lipid-driven heart disease. That was their lane.
So different from some of the other big names we hear about, like CRISPR Therapeutics or Editas Medicine.
Exactly. Companies like those tend to have broader platforms. They're applying CRISPR or other tools across many different diseases. You hear about sickle cell, eye diseases, rare genetic disorders, maybe some cancer work, perhaps exploratory cardiovascular stuff.
But Verve was all in on lipids and heart disease.
All in. Their thesis was, this is a massive population, the genetic links are clear, and our technology offers a unique potential solution, a one-time fix. That narrow, deep focus really made them stand out.
And this acquisition, it fits the bigger trend you mentioned, towards cures.
Absolutely underscores it. And it's not just about the editing tool itself, the molecular scissors. It's also hugely about delivery.
Getting the editor to the right place in the body.
Precisely. Getting those gene editing components safely and effectively to the target cells, like liver cells, for Verve inside the body. That's called in vivo editing. It requires really sophisticated delivery systems.
What does Verve use?
They use lipid nanoparticles, LNPs, basically tiny engineered fat bubbles that carry the gene editing machinery. This deal highlights how critical both the editing science and these advanced delivery platforms are becoming.
Okay, fascinating science, smart strategy converging here. Let's talk risks and opportunities going forward. What's the absolute biggest opportunity?
The opportunity is potentially enormous. It's disruption. If these therapies, like VERVE-102, actually work safely and effectively, imagine replacing lifelong daily medication statins, even the injectable PCSK9 inhibitors, with a single treatment.
One shot and you're done, potentially.
That's the dream. Given how many millions and millions of people worldwide are on chronic cholesterol-lowering drugs, a successful single-dose genetic therapy would be a massive commercial opportunity, and arguably a huge leap forward for patients.
Game-changing potential, absolutely. But
yeah.
there have to be significant risks too, right? This is very new territory.
Huge risks. First, regulatory uncertainty. The path for these novel genetic medicines isn't fully paved yet.
Even with Fast Track.
Fast Track helps. But no CRISPR-based therapy specifically for cardiovascular disease has actually been approved anywhere. Regulators will scrutinize these intensely, especially looking at long-term safety, potential off-target effects.
Effects on genes you didn't mean to edit.
Exactly. That's a major concern. Then there's just straightforward clinical trial risk.
Always a factor in biotech.
Always. Phase 1b is early days. Getting through Phase 2, and especially the huge, expensive Phase 3 trials needed for approval, is a massive hurdle. Success is never guaranteed.
Any other risks?
Well, with any acquisition, there's integration risk. Sometimes absorbing a smaller, nimbler company into a giant like Lilly can cause delays, shift priorities, potentially slow down the clinical work. And you always have potential legal or intellectual property battles with technology this new and valuable.
Right, so huge potential upside, but definitely not a slam dunk yet. Looking ahead then, what's the outlook for Verve's programs now that they'll be part of Lilly?
Well, one thing people were watching for was the initial data from that VERVE-102 Phase 1b trial. That was expected sometime in Q2 2025.
So possibly quite soon.
Depending on the deal closing timeline, yeah. That data, whenever it comes out, will still be a really key indicator.
But longer term, being under the Lilly umbrella must change things significantly.
Oh, fundamentally.
Yeah.
It changes the entire resource picture. Lilly has vastly greater financial muscle and operational expertise to run those big, complex, late-stage trials.
And for getting approvals and actually selling the drug, if it works.
Exactly. Regulatory affairs, manufacturing scale-up, global commercialization, Lilly brings all of that to the table. It dramatically boosts the chances that if the science holds up, these therapies can actually reach patients someday.
Okay, so for you listening, maybe as an investor, what's the takeaway from all this?
Well, based on the deal terms, that $10.50 plus the CVR, the information suggests if you held Verve shares before the announcement, holding on until the deal closes seems like the way to capture that premium. The immediate upside is pretty much defined by the deal price, and whatever value the CVR eventually holds.
And for someone thinking of jumping in now,
For new investors, the near-term play is really about the merger closing, not Verve's standalone potential anymore. The upside is likely limited to the deal terms, unless you're speculating on a surprise competing bid, which didn't seem heavily anticipated based on the info we saw right after the announcement.
but the underlying science is still exciting long term.
Absolutely. The long-term potential of the science is still there, maybe even enhanced with Lilly's backing. But that value capture now happens under the Lilly umbrella, not as a standalone Verve investment.
So let's wrap this up. What does this all mean, big picture, this Lilly Verve deal? It's more than just another M&A headline, isn't it?
Much more. It's a really strong signal from one of the biggest players in pharma. They see massive potential in gene editing, and specifically for common chronic conditions like heart disease. It's a huge validation for Verve's focused approach.
And it reinforces that push towards one-time cures?
Definitely reinforces that industry shift, moving away from just managing diseases indefinitely towards trying to fix the underlying problem with potentially curative one-time therapies.
Which leads to a pretty profound question, doesn't it?
It does. If this trend continues, if Big Pharma keeps snapping up these innovative gene editing companies, how fast will we see this shift away from chronic meds towards single-dose cures? Not just in heart disease, but maybe diabetes, other conditions.
What would that mean? For healthcare costs, for how we deliver care, for patients' lives?
Exactly. What are the downstream economic and societal impacts if you can truly cure diseases that currently require lifelong management? It really makes you think about what healthcare could look like in the coming years.
Absolutely fascinating questions indeed. A lot to mull over there. Well, thank you for tuning into this deep dive. We'll catch you on the next one.